Okay, let's dive into this. The stock market. We hear about it all the time, right? It's on the news, in movies, and it can seem super complex, almost like this secret language that only experts get. But what if I told you the core idea behind it is actually pretty simple, and it all started with a huge adventure?
Seriously, just imagine for a second. It's the 1600s. You've got this grand plan to send hundreds of ships all over the world searching for gold, spices, silk, all the good stuff. The problem? This is going to be massively, unbelievably expensive. So, how in the world do you get the money to pull it off? Well, the answer came from a truly revolutionary idea, one that didn't just pay for those voyages, but ended up creating the entire system we know today. It's a story about risk, reward, and, believe it or not, a little bit of coffee. All right, let's jump back to the very beginning, to the birth of what we now call the stock market. So you've got the Dutch East India Company facing this exact problem. Their solution was pure genius. Instead of trying to fund everything themselves, they went to regular people, private citizens, and they basically said, hey, help us pay for this trip. If you invest in us, we'll give you a share of the profits we make. This let them launch these incredible voyages. And where did all this happen? In bustling coffeehouses and busy shipping ports. And just like that, the world's first stock market was born.
It's a great story, for sure, but things have obviously gotten a little more complicated since then. We're not exactly trading multi-million-dollar shares over a latte anymore. So how does it all work in the modern world?
To really get it, let's follow the journey of, say, a brand new coffee company as it decides to launch itself onto the market. First off, our little coffee company needs to prove it's the real deal, so it pitches itself to big professional investors. If those investors think the company has a future, they'll agree to sponsor its big debut. And that debut has a special name, an initial public offering, or IPO. Once that IPO happens, bam, the company is officially on the public market, and its shares are out there for anyone, you, me, another huge corporation, to buy. So yeah, that fancy term, IPO, it really just marks that one specific moment a private company goes public. It's kind of like the starting gun for its life on the stock market, where its ownership is officially opened up to the entire world. And this is the absolute key to understanding everything. When you buy a stock, also called a share, it's not just a number on a screen. You literally own a tiny piece of that company. Your investment helps that business grow, and if it does well, the value of your little piece can grow right along with it. But what makes the value of that stock go up or down? Well, you can think of it like a giant seesaw, constantly balancing supply and demand. And here's that seesaw in action. Let's say our coffee company gets more successful. Maybe it opens a bunch of new stores or a new drink goes viral. More people see its potential and they want in. They want to buy its stock. As that demand goes up, so does the price. But on the flip side, if the company starts to look less profitable, investors might get nervous and think its value is going to drop. They start selling their stocks. And as more stocks get sold and demand falls, the price falls too. Okay, so what causes these big swings in demand? It's not just about whether the company makes a good cup of coffee. That seesaw is being pushed and pulled by all sorts of different forces. You've got all this day-to-day noise in the market. For our coffee company, that could be anything from the price of coffee beans suddenly shooting up to a famous CEO deciding to quit, which might spook investors. Then you've got even bigger things like new laws or trade policies that change the whole game. And, sometimes investors just need to sell their valuable stocks to pay for their own life goals. All these things create constant motion. And that leads us to maybe the most powerful and definitely the most unpredictable force of all, the human element. You see, beyond all the charts and numbers, one of the biggest drivers is just collective belief. Like this quote says, simple human confidence, or a total lack of it, can create massive economic booms or trigger devastating financial crises. It's the psychology of the crowd. Now, this all might sound like a complicated game for the rich and powerful, and you know what? For a long, long time, it was. But in the digital age we live in now, that has completely changed. I mean, back in the day, you pretty much had to be on a chaotic trading floor or have a special broker just to get in. It was an exclusive club. But now, with the internet, everyday people can buy and sell stocks, often in the very same ways a massive investor would. The most important point is that this system, which was once locked away, is now open to pretty much everyone. And this is really why it matters to you and me. As more people learn how this whole thing works, they can actually use it as a tool.
It's a tool to invest in companies and ideas you genuinely believe in, and at the same time, a way to work towards your own financial goals. The first step is just getting invested and understanding it.
So now that you know the basics of how a company gets from a simple idea all the way to the global stock market, the real question isn't just how does it work anymore, is it? The real question is what ideas out there are worth investing in?